Hey guys, it's JP. So in today's video, I want to show you a business that we were able to get $322,000 in business credit for, even though they had zero revenue, and we were able to get that whole $322,000 completely no doc, meaning we didn't provide a financial documentation, proof of income, anything. So I want to show you exactly how we did that step by step in this video, starting from exactly the beginning, going straight to the end to the final approval. And if you don't know who I am, my name is John Paul. I'm the founder of FundWithCredit.com. I have personally secured around $416,000 in 0% business credit, but I also own FundWithCredit.com, and we have secured millions in 0% business credit for clients there. So I know what I'm talking about when it comes to the business credit world, and I largely make these videos because there is a lot of terrible advice in the business credit world, and I want to give you advice and show you what I'm doing from someone who is actually funding clients and has already funded, millions in 0% business credit for the businesses I have worked with over at FundWithCredit.com. So that's why I make these videos. And with that being said, I'm going to go over now to the ugly whiteboard and break this down piece by piece. Okay, so the first thing I look at when I'm going to fund a business is what type of business are they and what is their company name and industry code. And for some of you that don't know, I only fund online businesses. So I only work with agencies, coaches, consultants, online service providers, e-commerce companies. I only work with online based businesses just because from my experience, those businesses are 100% the easiest to fund. The banks love them because they view them as having low inventory. They don't have a bunch of physical office space, and they're just high cash and high profit margin. So banks love funding online businesses. So whenever I am first seeing if I'm going to be able to fund a business, the first thing I look at is the company name. So with this specific company, I'm not going to give you the details on the company just for the business owner's privacy. So I'm going to just make up names, but what I make up is very, very similar to what the actual name of that company is. So for instance, when I first started looking at his name, I wanted to see, he was a marketing agency, and I wanted to see what is the company name and does it suggest anything risky? Because whenever a bank is processing an application, it's going to look at your company name, it's going to look at your industry code. And what they're trying to determine with that is, does your business look risky? Because there are certain industries that banks just don't like they don't care too much for construction. They don't like real estate companies too much. They don't like crypto, anything like that. They just view as being potentially higher risk for them. So they don't necessarily want to give a unsecured high limit 0% business credit card to a company that looks like it could just be a tiny bit more risky. I'm not saying there's anything wrong with those business models. I just know when it comes to getting 0% business credit that the banks don't care for them too much, and they tend to get lower approvals. So in this case, he was a marketing agency, and his name, remember this is a made up name, but it was JP Marketing LLC. So from a name standpoint, perfect. JP Marketing LLC, it's very neutral. It explains exactly what his company does. He's a marketing agency. So when it came to the name, absolutely perfect. The next thing I'm going to look at is the NEX code. So if you're unfamiliar with what the NEX code is, what this is just your industry code. It basically tells the bank what industry your business should be categorized as. Because I have seen companies that had a good name, but their NEX code did not really show what their company does. And they actually got low approvals and got put into a high risk bucket just because of this, because their name was neutral like JP Marketing LLC, but they accidentally had their industry code as real estate holdings. So the bank thought that they were a real estate holding company and not a marketing agency. So you want to make sure that both of these are dialed, because the bank is going to be reviewing these and figuring out which bucket they want to put you in, the high risk or the low risk bucket. So when it came to the NEX code, the industry code, he had it on the head. It was marketing consulting services. So perfect name, industry code was set up perfect. At this point, I was like, okay, this is a business that I can work with and I can fund. So we decided to move on to the second piece of this. So the second piece, and the most important in my opinion, is I needed to see where he was from a credit qualification standpoint, because we are applying for business credit, but we are securing the funding by utilizing the personal credit profile. And the reason this is so important and why this has to be absolutely optimized and dialed is we are going for unsecured, high limit, 0% business credit cards here. And when you're going for something like that, a very large unsecured line of credit, well, business credit card, we're asking them to give us all this money without, you get an auto loan or a home loan, you're going to secure the house or the car against it. When you're getting unsecured, you're not securing anything against it. It's just a 100% just free line of credit. There's no collateral with it. And also, we are trying to secure the funding without having to provide a financial document, because this specific company I am talking about had $0 in revenue. So we needed to secure all of the funding that they needed without having to provide a financial document. So that's going to come down to the personal credit profile. How it's positioned and how strong it is going to determine how big or how much basically funding, business credit, we'd be able to get them. So whenever it came down to the credit qualification, this specific person had 6 personal credit cards, which is perfect. I like to see at least a minimum 3 personal credit cards. He had 6. He had a mortgage, which is good. Now it shows loan diversification. He has personal credit cards and he's never had a late payment. He has a mortgage and he's never had a late payment. So it shows that he can handle debt and not miss a payment. He can just handle a lot. It's super, super important to have that diversification, because I've had people who only had personal credit cards and they had no other type of debt, and it was hard to get them business credit because they just didn't have that diversification. So he had a mortgage and he also had student loans. Now, in most cases, I would like to also see an auto loan on here, but if you have a mortgage, student loans, and 6 personal credit cards, that's more than enough. Plenty. You do not need more than that. I mean, I've had really, really good success getting people approved when they just had personal credit cards and just student loans. So I just like to see at least one other form of debt on their credit profile. But this is what this specific person had. And once again, he didn't have a bankruptcy, he didn't have any late payments, and he didn't have any collections or anything. So from that standpoint, he was really, really, really dialed. Now, here is the one thing with this client that was not where it needed to be, and I knew we're going to have to get a little bit creative to make everything happen. So he did have 6 personal credit cards, but his utilization was at 53%. Now, if for any of you who are unfamiliar with kind of where you need utilization to be to apply for business credit, you need to be below 30% on each personal credit card. Now, this isn't 30% on average. This is 30% on every single one, because I've had people, let's say, who had like 6 credit cards, and one of them was, or 5 of them were at 15% utilization, so perfect, they're under 30%, but one of them was at 83 or 85% utilization, and they still wanted to proceed with funding because on average, their utilization was at like 27, 28%. So it looked like they were ready to go through funding, but since that one credit card was above 30%, that could inhibit results. That could either end up in a denial, or even worse, you could get approved for the card, but you get approved for, 2-3K on a card that should have been 50, 60K. So you're taxing yourself a lot of funding right there. So I recommend every single personal credit card be below 30%. And in this case, his utilization on average was at 53%. So with all of this in hand, I knew that I could fund this company and this business owner just fine, but I had to figure out this piece before I could, because if we went straight into it, the results just weren't going to be good. So that brings us to number 3. So in this particular spot that this person was in, since they had 53% utilization on the personal side, the number one thing we need to focus on is getting that down. And the easiest way to do that is to get a high limit personal loan. So number 3 was we needed to get a high limit personal loan. So since he had 53% utilization, I wanted to just go ahead and go for a high limit personal loan because of 2 reasons. Number 1 is This business owner had $0 in revenue. This was a business that he was trying to get up off the ground, so he did not have a lot of spare cash. So what I like to do is, for certain banks, I like to set up a business bank account, and I like to drop cash into the account before we apply, because it just makes you look a little bit more credible when you're applying for them, and they tend to give higher limits. So with that being said, I wanted to get a limit to both give us capital for the bank accounts, and I also wanted to give us capital to pay down these personal credit cards. So we went through, we applied for the personal loan, and we ended up getting $45,000 on the high limit personal loan. So he went ahead at this point, used the personal loan, paid down this to, I believe it was around 10 to 15%. I don't like paying cards all the way to zero. I don't ever see a benefit in that. I've had better results just when the cards had about 10 to 15% utilization on it. So he used the $45,000 to pay down these to about 10 to 15% utilization. And then now we had plenty of capital to use to now apply for, or to put into bank accounts for some banks that we're going to apply for moving forward. I'll explain which banks those are that we actually drop the cash into, but that's the main piece that we cover with step number 3. And then after 3, so now we have a high limit personal loan, his cards are down, we have the liquid capital. The next thing I want to do is I want to go for banks that are only a soft pull. So if you're not familiar with what a soft pull and a hard pull is, whenever a lender is looking at your credit, if it is a hard pull, they're going to put a hard inquiry on your credit report. A soft pull is when they will pull your credit, take a look at it, but they do not put an inquiry on it. So I want to hit soft pull banks first before we go for hard inquiry banks, just so we can get some capital on the door from get some capital before we put any type of dings on the credit report. Because as you start to get inquiries, it's going to get harder and harder and harder to get funding. So we want to make sure that we hit the soft pulls first, and then we can move on to the hard pull banks. So the banks that we hit first for the soft pull is we hit Divvy, also known as Bill right now. We hit Divvy, they will do a soft pull. And then we also hit American Express. Now, here's the trick with American Express. Since he had 6 personal credit cards, one of the personal credit cards that he had was from American Express. And I know from experience that if someone has a personal credit card from American Express and they've already done the hard pull, so if he has that personal card with them, that means they've already hard pulled his credit at some point. So since they've already hard pulled his credit, whenever you go to get additional American Express credit cards, they will not hard pull your credit. Everything will be a soft pull. So in this case, since he already had the personal American Express card, I knew that they were only going to do a soft pull. So we hit Divvy. Now Divvy is not a 0% card, just to be fully transparent with you, but they tend to give about 10 to 20K limits, which is just a free 10 to 20K. So I always hit this bank. So we hit Divvy. Divvy gave him just 20K. And then we hit American Express. So American Express is actually really good for giving you multiple credit cards on a soft pull at one time. So the thing I do with them is I want to hit the 0% cards first, and then we'll hit the charge cards at American Express. So the first card that we applied for, we got approved for 20K. The second card we applied for, we got 12. Then we went for a charge card, and it's hard to really put a limit on a charge card because there's actually no spending limit. But if they do have a pay over time feature, and the pay over time feature on this card was 35K. So you could put a limit on it, but I'm just going to leave it as just an approval. We got it. And then fourthly, we went for their business line of credit, and we were able to get 23.7K on the business line of credit. So we got 20K, 12K, we got approved for the charge card, and then we went for the business line of credit, and we were able to get 23.7K on top of Divvy 20K. So if you want to tally all this up together, pretty much immediately, we already got the 45K personal loan approval. We got 20K at Divvy, and then we ended up getting, I don't feel like doing that math, but everything we got here at American Express. And this is before we even have a hard inquiry on the credit report. And just one thing I want to note with American Express is, and Divvy, is with Divvy and American Express, you actually do not have to use a bank contact or a relationship manager at that bank. You can apply online for Divvy and you can apply online for American Express and get approved. That's exactly what I did here. These were not working with a banker, not getting on the phone, anything, just completely applying online. So that was the first thing we did. And then as soon as this was secured, we then moved on to, I guess you call it step number 5, but it's going to be the second set of banks. And for this one, we hit Chase. Now Chase does do a hard pull. You're not going to get a soft pull with Chase. You can do if you're getting a credit line increase, it can be a soft pull with Chase. But when you're applying for 0% business credit, it is almost always, they're going to pull your credit every single time you apply. So we hit Chase. And with Chase, it's going to work different than Divvy and American Express. So you do need to set up a checking account, and you do need to put cash in the checking account prior to applying. So I recommend, if you can, so in this case, we have a personal loan. We have more than enough funds. If you have more than enough funds, I would set up the bank account, and then I would actually drop $10K in the bank account. If you don't have that much liquid funds, you could do $5K. And I've even seen people get approved for high limit Chase cards with no money in the checking account. It's just, that's not as common. Whereas like dropping cash in the checking account before applying works very, very, very well. So if you can drop 10K, drop 10K. If not, 5K. And if not that, then you have the option of moving forward with Chase without dropping money in the account. But I always recommend you put cash in the account before. It's just a different feel. You set up the checking account, you drop 5 to 10K in there, and then now you're going to apply for funding with them. It's just, you look like a higher roller. You look like a more established business, a high cash flow, like you're cash flowing because you obviously just had cash sitting around, even though, you may have just, in this case, secured the funds right here. It doesn't matter. Like, you still set up the bank account, gave them some money, and now you're asking them for a credit card. They're more likely to approve that. Also, the thing that's going to be different with Chase is you need to use a relationship manager. If you are unfamiliar with what those are, a relationship manager is essentially just a person at the bank that you work with. They're kind of like the middlemen. They work primarily with businesses, and they help them get approved for credit products. And I have seen whenever you apply online with Chase, like, you may get a 10 to 20K approval. When you apply through a relationship manager, you can get approvals, as high as 75K on one card. You can get 250K cards. So for this specific person that we funded, because of their credit profile, because their score was high, it was after we paid down the personal credit cards, their score was now above 800. So because the score was above 800, I just went ahead and we went for a 75K card. So just went ahead, secured the 75K approval, done. And then we decided to move on from Chase. Now, from here is when we take what I like to call a rest. So I like to think of funding in rounds. And since we had already gone through round 1, the business owner was happy. He had plenty of funding. He had the personal loan, he had Divvy, he had Amex. He just got the 75K approval from Chase, and he was good. He had plenty of funding, and I agreed. He honestly did not need more at that exact time, because what his whole goal was he just wanted to pump this money into paid ads, and now he had, between 150K and 200K now to use on his paid ads. So he had 100% like plenty of funding. So I decided here to take a break. Now, with this break, I like to usually wait. So I'll just put 6 here, say this is the 6th step. I like to wait about, I'm going to say 3 to 6 months. Normally around 6 months after we go through the first one, because some banks can see if you've been applying for credit on the business side, and then they can see that you have the recent inquiries on the personal side. So in this case, I like to just take a break. If they're happy, I'm happy. So we decided to wait 6 months. And we would just attack it at a later date. So whenever the 6 months, though, was up, So whenever the 6 months was up, we decided to jump right back in. So what we hit first when we came back in was Truist. Now, Truist is not a bank that is in every single state. I think it's in like 20 states, something like that. So if your state has a Truist, then I would recommend you hit Truist here, because the whole goal is to hit banks that will pull different credit bureaus. So I know from experience that the personal loan was going to pull from TransUnion, and then I knew Divvy and Amex weren't going to pull at all, but then Chase will pull from it just depends, but normally it will be Experian and TransUnion. So in this case, he would now have 2 inquiries on Experian and 2 inquiries on TransUnion. So I went to hit a bank that would pull Equifax, because you got the 3 credit bureaus, Experian, Equifax, or TransUnion. So I wanted to find a bank that would pull Equifax, and I know from experience that Truist does. So we set up the Truist checking account. With Truist, you don't have to put near as much in. You only have to drop $2K. I mean, I've seen even less. I've seen like $200 work out just fine. But I wanted him to drop $2K in the bank account because there was an offer that you could get $400 if you drop $2K in. So we dropped $2K into the checking account, and then we applied immediately for their business credit card, and we ended up getting $20K. So $20K, 0% at Truist. And then at Truist, they're not going to ever give you more than $25K. So in this case, Truist was done. He could take his money out, and we had that $20K approval. So then we decided to move on. So the next bank that we wanted to hit, it was US Bank. Now, US Bank is actually very similar to very similar to Chase with how we apply for them. So I always recommend you set up a checking account. Now, this one is the same way. If you have 10K, I like to see 10K dropped into the checking account. If you have 5K, 5K. But ideally, I like to see 10K if all possible. Obviously, in this case, we had that personal loan money. We had plenty of cash still to drop into that bank account. So we dropped 10K into US Bank. Now, this one you also are going to use. So just a quick note with Truist, because I forgot to add this. You're not going to use a relationship manager, but you should hop on the phone with their small business consulting team. So the small business consulting team, it's a phone number you can call, and I recommend applying with their consulting team and not going online. Online tends to get smaller approvals. So with Truist, talk to their small business consulting team. It works out tremendously. All right, so with US Bank, you set up the checking, you drop the 10K, which is exactly what we did. We set up the checking, drop 10K, and then this one is actually going to work a little different. So normally, you would just apply for one card, wait for the approval, apply for the second card, wait for the approval. With US Bank, it's a tiny bit different. So you will work with a relationship manager, same thing as Chase, but instead of applying for a card and waiting for the approval and then applying for the second card, you actually apply for 2 cards at the same time. So you hop on the phone, you tell them, hey, I'd like to apply for this card and this card, exact same time, and just have them run them, boom, boom, right there. And I have found that you can normally get both cards approved if you do 2 of them at the same time. So in this case, we applied for both cards, and he got $23K on the first one, and he got $10K on the second one. So at total cheddar at US Bank was $33K. As soon as we got those 2 approvals, I knew that we weren't going to get more from US Bank, so we decided to move on to the next bank. Okay, so the next bank is actually a bank that we've already hit. We decided to hit Chase again. Reason being, Chase has great credit cards, and we had only hit 1 card at Chase, and at the very least, I will normally apply for 2 cards at Chase. So in this case, we went back to Chase. So we took the cash that was in the US Bank account, transferred it back over to Chase. So now we have our 10K in the bank. And in this case, since he already applied at Chase, And since we applied and have a 75K card, that's a very high limit card. We already have 75K at Chase. So in this instance, I don't want to apply through a relationship manager and go through that route again, because I've noticed that when you go through a relationship manager for additional approvals, they are going to tend to want to just take from this credit line for the new approval. So if you're like, hey, I'd like to apply for this other card, they'll be like, okay, well, we're going to take 10K from your 75K and give it to you on the other card. And that's not what we're looking for here. We want new additional funding, new additional business credit. So in this case, I don't like to use a relationship manager for the second approvals. I like to apply online. So what we'll do is you drop the 10K, you apply for card number 1. If you get the approval, then you apply for card number 2 literally directly after. And remember, this is fully online. This is just going on the website, applying. If that approval goes through, you apply for the second one. And we were able to get from Chase 20K on the first card and 20K on the second card. So we were able to get an additional 40K from Chase, bringing our total Chase funding to 115K. And but yeah, I mean, there's not really much more for me to say here. I mean, these are all the banks. This is the exact sequence we hit, and it ended up being 322K. And I'll be honest, because I've just been kind of rolling through here, showing exactly what we applied for. I may have gotten a couple of these approvals wrong, and it may not equal exactly 322,000. So you'll have to take it easy on me there, because I can already hear people in the comments right now telling me all this doesn't equal 322K, and that's just because I may have gotten a couple of these approvals wrong, because I mean, as you can see, we hit a lot of different banks, we had a lot of different moving pieces, but the number should be very, very close to 322, because I do remember a lot of these approvals. But yeah, that was it. That's how we took a business. And once again, his business had $0 in revenue, not made a single dollar. This was funds to get started. So literally zero revenue, and we got 322, consider that being a 2, 322,000. And just to top it all off, they did not ask for a single document. This was entirely no doc. So that's exactly step by step how I took this specific client from 0 to 322,000. But yeah, that was exactly how I was able to take that business with zero revenue from 0 to 322,000 and 0% business credit. Not all of it was 0%, so I'm just going to say business credit and funding. But that's how we did it. That's step by step. That guy was a really good dude. I was so happy for him, because he deserves to get that capital and be successful. So I am very, very, very happy for him. He was fantastic to work with. But I appreciate you if you've made it this far for listening in. If you would like more styles like this, where I just break down funding and results that I've gotten for clients, I'd be more than happy to do that. But please let me know down in the comments what type of content you'd like to hear, and I'd make sure to get to it, because I'm going to start doing about 2 videos a week. But I really hope you enjoyed this, and I will see you guys hopefully in the next video.